Hello traders, welcome back to another episode of the technical market breakdowns. I think last week Caleb did for you a breakdown. This week it's me who will be taking you through. Unfortunately, I'm doing it kinda late. You'll receive this probably Tuesday evening, Wednesday morning. Some of the setups that I had have already taken off, but by the end of the day we're not sharing with you necessarily the setups that we're taking or signals or anything of the sort. We're just trying to share with you, our thought process behind us making some decisions. How do I decide to buy this? Why do I decide to sell that? Why do I decide to do ABCD? I hope that's what you're trying to learn from these technical breakdowns, because if it's a signal you're looking for or one trade, you're missing the point, because by the end of the day, those are not the things that will make you successful as a trader. Now, to start off, I like looking at markets fundamentally and technically. Fundamentally, last week we got 50 basis points from the Feds. The European Central Bank also did 25 basis points, but 50 basis points for their main refinancing rate. So we can see that central bankers are really trying to come down from how tight or how far they were up, to come down as fast as possible. And the reason for that is they're trying to avoid a recession. Some people are arguing that in Europe, probably some countries are already in a recession. Like, for example, this week on Monday, we saw very weak PMI data coming from Germany. That could mean that other economies will follow suit. If you have studied global economies, you know that often the problem stems from one place, but it quickly spreads, like the way COVID spread, the way COVID was spreading to other places in the world. China has significantly been slowing down. Europe is significantly slowing down, and the US is also showing some weaknesses, okay, or some slowing down in how fast the economy is growing and how strong the economy is going. Now, does that mean markets will start selling off? No, because markets do not really reflect what is currently happening. They reflect what is likely to happen, and already markets have priced in significant rate cuts. In fact, for the US, we have the probability of a 1 full basis points cut before the end of the year. That means if you're getting a full percentage, another 50 basis points before the year ends, that would mean that what markets were expecting when the year started, and most economists argued markets were wrong, is truly what has taken place, as much as it has happened in a very short, compressed time. And that's the beauty of markets. Things change, we get new updated ways of doing things, we get new data, we get fresh ideas, and then we get fresh trends developing in the market. Now, with that said, we've seen the dollar coming down significantly. I think we've seen the dollar from around 112, 114, 115 is where we topped. Between that level, we've seen a slow sell-off now to about 100 on the dollar index. We've seen pairs like the pound coming back all the way from about 1.15, now they're approaching 1.35. The euro coming back from around 0.95, now it's approaching 1.15 again. So significant shifts or changes in the direction of the market have taken place over the last couple of months, and we've seen markets now coming back up. Gold, new highs. We've never seen gold trade at 2,700 now is being approached. I think ultimately it could get to 3,000. That's why I'd start being worried about where gold prices are going. But before that, I think there's a very solid reason for bullish price action to take place on gold, for gold to just keep on flying off the page. Now, I'm going to share with you just my analysis or insights on just around 4 or 5 markets. I'll look at gold, which is a commodity. I'll look at Euro USD, GBP USD, and then I'll look at some of the yen pairs, what is happening with them. I think those are the pairs that I'm mainly prepared to analyze for you at this specific point, and I hope you learn 1 or 2 things. So to start off, I'll start with the precious metal, which is a very good friend to many and a very big enemy to many also. I feel like you can make a lot of money trading gold, but you can also lose a lot of money trading gold. And at this moment, I think majority of traders are losing money. Why? Because most people are trying to fade the momentum in the markets. And if you have some experience in the market, you know that generally it's not good for you to try and look for that top. Because if, for example, you thought gold was overvalued at 2,500, now we're at 2,638. If you think it's overvalued, tomorrow it will be at 2,700. If you think it's overvalued, it could be at 3,000, 3,500. You would rather focus on being, on making money rather than on being right. most of you are focused on being right. That's why I've received a couple of inquiries on how far gold will go on the upside. And the question I keep posing to the people who are asking me is, are you interested in making money or being right? Because I feel most of you are losing money because you're interested in being right. You shorted it at 2,500, you are wrong. You shorted it again at 25, you are wrong. 25.50, 2600, 2700, and you'll do that all the way to 3,000. And by the time you realize that this is a strong, bullish market driven with a lot of momentum behind it, you will have blown your account. So avoid that. Avoid trying to pick tops and bottoms, especially in markets that are driven by significant momentum. You know, a lot of momentum coming back behind the markets. So to start off, I'll look at gold from the weekly perspective. Honestly, no sign of market slowing down. You know, if you just look at the bull market, all the way after we took out the 2,000 level, which is where we had consolidated for quite some time. You know, we consolidated between 2021 to 2024 when you had a breakout. You had a breakout this year in March. I remember that very, very well. And markets were consolidating, you know, between 2,1700 for around 3 years. Then you saw a breakout this year. And from the breakout at 2,000 level, we've seen now gold is approaching the 2,700 level, which is the next upside target on this market. From the candle price action, honestly, there is no bearish signal. So why would I go short? Why would I impose my idea on the markets? I feel like markets are really, really bullish. And when something is bullish, keep moving with it. If I go to the daily charts, however, my technical indicators pinpoint that for the short term, markets might be overvalued. You can see gold is now trading around the R3 level, 2650. Therefore, I believe that we could see a temporary correction between 2650 and 2700. I'm still not keen on timing the top. That's not my style of trading. I don't look for reversals. I look for trends and then I stay in the direction of the trend. Now we could see a top at around 2650, 2700, which is the next upside target on this market. If I go to the 4-hour time frame, if I just look at markets from the 4-hour time frame, you can see clearly that prices came down, retested the fair value area in line with 2550, started moving higher, and now we're above 2625. 2650 will surely be attained. If it's broken, we could see 2675, 2700 before we get the correction. From a risk reward perspective, however, I don't think there's a good trade here in the short term. Why? Markets are overvalued. Therefore, the odds of a correction are the odds of the trend continuing are less than the odds of a correction, meaning for the long term, the trend is still intact. But for the short term, we could see a minor correction taking place in the market. Do I know how far the correction will go? No. Do I know the pattern the correction will take? No. Do I really need to know? Not necessarily. What I know is that at this moment, prices are hovering around overvalued areas, 2650, 2700. And as long as prices are around that area, we could easily see a temporary correction. Now, if I look at markets from the 15 minutes time frame, so if I look at markets from the 15 minutes time frame, you can see clearly that prices have moved to the fair value area, taken out the fair value area, and now we're approaching 2650, which is the next upside target. So the next chart, this is gold futures. I won't go into them and how I use it. Now next I'll look at GBP USD. So let me just look at GBP USD. So that's GBP USD. I'll look at it again from a weekly perspective. Now GBP USD is in a significant bull market also. If you look at what prices have been doing, you know, since we attained the 1.25 level, we've been moving higher, 1.25, 1.3, 1.3, now we're headed towards the 1.35, 1.4 level, which is the next upside target. Now, if I look at this market from the daily chart or from the daily perspective, you can see very, very well that markets have been moving quite higher. So you can see we had this move, a correction, and then we got this move now towards the R2. I think markets could break this. You could see markets testing 1.35, break 1.35, I wouldn't be surprised by 1.3625, which is the next upside target. But 1.35 will act as a very good resistance level. On the 4-hour time frame, I had this set up, so I executed along from 325 and see my target has been attained at the 3375 level. So that's a trade now that is behind me. But I still think there's some upside towards the 1.35 level, which is the next upside target on this market. Next, I look at Euro USD. So Euro against the dollar. So if I just look at it from the weekly perspective, Euro dollar is also quite bullish at this moment. So if you just look at prices, you see the previous week we had a significant bullish close, meaning even this week markets could continue moving higher. My next level of resistance comes in at around 1.125. Taken out, we're going to 1.15. And I think there's a very, very high chance the euro could attain 1.15 before the end of this year or early next year. I think euro is very, very likely to keep moving higher to around 1.125, 1.15 before early next year. I don't think the first quarter will end before the euro trades there. If I look at it from the daily perspective, the euro is still trading around the R1 level, so I'm expecting markets to keep moving higher, break and come to this level, R2, 1.125, which is the next upside target. So if markets take out this previous high, I think there's a high chance markets could rally all the way to 1.125. Now if I look at it from a 4-hour perspective, you can see clearly where prices are. So we had this move, a correction, this move, a correction, and it looks like prices will just keep moving higher. So if we get a break of this level, R1, I think there's a high chance we could see R2 and probably R3, which is the next upside target on this beautiful currency, the most liquid currency in the market. Next, I'll look at dollar yen. So here I think there's a very good opportunity. Now, the story of the yen is quite funny. We've gotten the first rate hike for the last 20 years, if I'm not wrong. Yeah, for a long time. I'm not so sure if it's 20 years, but I think so. I think we got the first rate hike after a very long time, more than 15 years. I'm not sure when was the last one. But no, it could be in 20 years because I feel like Japan went into negative rates after the Japan crisis, which took place in the early 90s. So I'm not so sure, but you can confirm that for yourself. Now, that means a change or a shift in policy. You know, we are moving now from negative rates to flat, and now from flat to, you know, a real number, 0.25, 0.5. So we're at 0.25. This last Friday, the Bank of Japan did not hike, so they still left the rates at the same place. However, my understanding of how markets work, I think there's a significant shift in what the yen should do. Because unlike other currencies whereby we're seeing rate cuts coming into the market, if you look at what Australia is doing, Canada, US, China, you know, Europe, we're seeing rate cuts. But in Japan, we're seeing a rate hike. That means the carry trade that was there before is somehow reversing, whereby people would borrow in Japan and invest in other currencies because they had a higher rate. Now it looks like what is going to happen is you're going to be borrowing in another country and investing in the yen because their rates are likely to move higher. Now with that said, expect a stronger yen over there. And if you understand fundamentally how currencies work, it really takes a long time for currencies to absorb the fundamentals. Unlike a stock, currencies can take years, and the trends in the markets in currencies can be years long. So what do I expect? I expect the yen to keep moving higher, and I expect dollar yen to keep moving lower. We've seen a move all the way from around 160, which was the top in this market. You might be surprised how I'm able to pick all these numbers. It's muscle memory. Been trading these currencies for quite some time. And you can see from 160, we've gone down, straight leg, 160 all the way to 145. Now what do I think? Is this the end? Not really. I still feel like there's some downside. Why? Because of a combination of reasons. I think we'll have more rate cuts in the US and more rate cuts across the globe. And I think there's a very high chance of a recession, and a recession only means more rate cuts, more money being pumped into the economy. On the flip side, in Japan, we're having rate hikes, and we don't have any signs of a recession. Now, if that takes place there and things continue being as good as they are in that country and they keep hiking rates, then what we are going to see is a very big interest rate differential. And markets won't wait for that interest rate differential to reflect on the prices. In fact, markets will show that faster than traders might assume markets will. So I'm still looking for the yen to move lower. I think we could see the yen going to as low as 135, 130, 125 in the extreme cases. I wouldn't be surprised by a move down there. On the 4-hour time frame, I'm currently in this short position, and I'm expecting markets to slide from around this level to take me down all the way to 137.5, which is the next downside target that I'm watching on this particular market. So this is my outlook on dollar yen. So more bearish pressure coming into the market. Expect the markets to just keep moving and sinking lower. So that's my outlook on dollar yen. I think I've explained both fundamentally and technically. Now, pound yen does similar things to dollar yen. So if you pay attention to what the pound yen does, you'll see it doesn't have much of a difference to what dollar yen does. If you look at pound yen, you'll see clearly there isn't much of a pattern here to be traded, honestly, at least a pattern I'm familiar with. But I can see clearly that price is rejecting 192.5. So if price rejects the level, keeps moving lower, we could see prices coming back down to 180 or even lower. And on the 4-hour time frame, you can see 192.5 being rejected, and now prices are coming down lower. So we could see prices coming back down to 190 fair value area. If we tap 190 fair value area, we could easily see prices going down to 185, 182.5, which is the next downside target. So that's my outlook on the different markets that I'm trading. I think I'll mainly look at that. Probably I could add for you just some little bit of insight on what I expect to be taking place on the dollar. Now, the dollar is one of the most significant or important currencies in the world. And the dollar is the reserve currency of the world at this particular moment. But the dollar had been quite expensive for some time. I think from when COVID took place, the dollar went down, then it came back up and came back strongly after the inflation numbers. But we've seen a softer dollar ever since the Fed started pinpointing to a rate cut. We've seen a very, very softer dollar. We're currently approaching 100, so I expect the dollar to trade at 100 probably before the end of this week. 100 is quite a level. I don't think I'd expect a smooth, break of 100 and just a continuation. But it could also mean that we will see a very strong break of 100 and a move lower, especially if you can get a fundamental catalyst backing that move. We could see the market moving significantly lower and heading all the way down. So that's my outlook on what is happening in the different markets. I've shared with you my thought process on both. I hope you learn a thing or two, and I hope you can also incorporate some of the ideas that I'm sharing into your trading process. And I wish you the best of luck in your trading week. May the pips be with you. Peace.